March 5th, 2026, the practical ban on mortgage industry trigger leads, signed into law in September 2025 with essentially unanimous support in Congress, has officially taken effect. This change is meant to ease one problem that home buyers searching for a mortgage face. Trigger leads are a practice where one of three major credit bureaus, Equifax, Experian, and TransUnion, this is wild, can sell information that a consumer is seeking a mortgage application. The credit bureaus receive this information when a mortgage lender pulls the applicant's credit report, and so can sell it applicant's personal account information to competing mortgage brokers or lenders. Thus, after applying for a mortgage, an applicant could be swamped with text, emails, and other communication from those rival lenders. Think about this for just a second. Can you imagine this? You recommend, 3 or 4 lenders, right? They call each one. They finally decide on one, and that lender has to submit that client's report, that client's data to one of the 3 credit bureaus. Those bureaus can then take that information and sell it to third-party mortgage lenders that then can now contact that same client. Any of them, right? It's just wild. And so the mortgage lender is forced to have to use these credit bureaus to then allow that data to be sold to somebody else that could then compete with them directly, but they have to provide the data to them. It's just wild. It'd be like me having being an agent and me having to submit their data to some other platform that then can take all that data and give it to another agent, right? And that other agent then has the right to contact my client. It's just wild to me. So this was even allowed. It's just crazy. It's all about money, guys. The major change enacted in the Homebuyers Privacy Protection Act is that credit agencies cannot sell a mortgage applicant's information to any third-party mortgage lenders unless the mortgage transaction is a firm offer of credit or insurance. Firm offer meaning a guaranteed offer based on a pre-screening of a customer's credit. The credit reporting agencies must also obtain the mortgage applicant's consent to have their information sold as a trigger lead, unless a competing mortgage lender has a pre-existing banking relationship with the applicant. That protects them, right? Because they got to have at least a pre-existing, relationship with them. So that's a factor. Then they also have to have information to be able to offer them an actual offer of something, a firm offer. So they have to have information. They got to be able to know that this person can actually qualify to be able to reach out to them. So there's a wall there that really, to be honest, going to be hard to overcome, to be honest. So a ban on this practice was widely supported within the mortgage and real estate industry, with advocates and stakeholders pointing out privacy concerns as well as the nuance of a sudden and often persistent barrage of inquiries faced by applicants. Financial lending platform LendingTree had lobbied in support of the legislation. In a statement forwarded to Risk Media earlier this month, Patrick Brennan, head of government relations at LendingTree, praised the practical ban of trigger leads as a consumer-friendly change. I mean, just kind of crazy. The law also has been supported by the National Association of Realtors and the Mortgage Bankers Association. In an op-ed written for Risk Media, Matthew Emery, NAR's senior policy representative on financial services, described the practice of trigger leads as abusive. Quote, consumers currently have no knowledge that their data is being sold, nor by whom, and they have very limited avenues to opt out. Often consumers believe their real estate broker or agent, mortgage lender, mortgage broker, or another party in the transaction has sold their information, when in fact that is not the case. He further framed the passage of the Homebuyers Privacy Protection Act as a triumph of collaboration due to both the different sectors of the industry lobbying on behalf of it and its bipartisan support in Congress itself.